Hello friends, welcome back to another interesting session on cash flow statement, which is a part of our ASA accounting exam series. We've already decoded investing activities. Now let's move forward and decode financing activity. Now, financing activity means what is the part that you have to concentrate upon. It is the part related to capital and the non-current liability, that is the borrowings. The way in which a business, a company finances itself is by means of owner's capital, that is in the form of share capital and through the means of borrowings. So these are the part which you have to focus upon. Now let's understand the question. It's the same as the previous question. Now the financing part, share capital. Look at that. On 31st March 2017, it was 17 lakh. It has changed to 19 lakh. There is an increase. When does the share capital increase? That is to be understood. Share capital increases only when shares have been issued. So here there is no note involved, so we will assume that 2 lakh worth of shares were issued for cash and money came in. So therefore, the first point here would be the issue of shares. So under cash flow from financing activity, we can say proceeds from issue of shares. Rupees 2 lakh. Now going forward to this. Next we have to look at this reserves and surplus is a part where we are going to use it in the operating activity. Nothing as such here. The long-term borrowing, there is a change from 4 lakh to 5 lakh. Let us go and see what is that related to. So note number 2. The note number 2 is the long-term borrowing, which is actually 12% debentures. So company has borrowed by issuing debentures, and that has increased from 4 lakh to 5 lakh. What does that mean? Again here, during the year 1 lakh worth of debentures were issued and money was raised. So 1 lakh has come into the business. So through the issue of debentures, there is an inflow of 1 lakh. So that we can include here. Proceeds from issue of debentures. There is an inflow of 1 lakh. And if you observe, I said it is about the owner's capital and borrowings. Now see, there is borrowings under the current liability as well, short-term borrowing. So this borrowing is also part of financing activity. So short-term borrowing, note number 3, from 1,70,000, if it has gone down to 1,70,000. Let us look what is there under the note number 3. It is short-term borrowing represented by bank overdraft. Very important point where children try to get confused is that bank overdraft and one more item, cash credit. Both of them are part of financing activity. Bank balance is a part of cash and cash equivalent, but bank overdraft is not a part of cash and cash equivalent. What is it part of? Financing activity. So bank overdraft and cash credit, if you have, you should remember you have to take it under financing activity. Now what has happened? In the beginning it was 1,75,000 the last year. This year it has gone down to 1,70,000. Means during the year 5,000 worth of overdraft got repaid. It got reduced, means repayment. So let's put that here. We'll say bank overdraft repaid. So when it is repaid, there is an outflow. So we will put it in bracket 5,000. Sorry. So it is 5,000 rupees. Now going back about this debentures, let us see there is an increase. If you go further, you find in the additional information, there is this information. Rupees 1 lakh, 12% debentures were issued on 1st April 2017. What is the relevance of this? The relevance is that, debenture holders lend money to the company, and on that money they are lending, they are entitled to interest. And that interest is payable at the percentage which is prefixed to its name. So therefore 12% interest has to be paid to the debenture holder, which is a charge on the profit. Now you have two amounts. So you might be feeling whether to provide 12% debentures on 4 lakh or 5 lakh. For finding out that, this information is relevant. When was that 1 lakh worth of debenture issued will make the difference. As in this case, it was issued on 1st April 2017. It means those debenture holders had lent to the company the beginning of the year. So they were there entire year. So they are entitled to interest. Therefore, we will have to calculate on entire 5 lakh interest. So what would be the interest on debentures? It would be 12% of 5 lakhs. That would be 60,000 rupees. So this is the amount of interest which has to be paid. So that is also a part of financing activity. So interest paid on 12% debentures. So there is an outflow on account of interest of 60,000. And that's it. If you see, this is related to investing activity and there's nothing else related to financing activity. So these four are the components. So 3 lakh minus 65,000, that would be 2 lakh 35,000. So this is the amount of cash inflow from financing activities. So financing activity is as simple as this. All you have to concentrate upon, as I told you, is the capital part and the borrowings part. It's not necessary the borrowing should be only non-current liability. There can be borrowing like this, short-term borrowing represented by bank overdraft or short-term loans. That also has to be considered. Consider the change, go to the notes if they are there and see them. Change that has come about, and also verify the additional information to see when that change occurred. Suppose this change had occurred at the end of the year, then those new debenture holders worth 1 lakh wouldn't have been entitled to interest. You should have calculated on the opening, that is on 4 lakh, you should have calculated the interest. Because it was 1st April, beginning of the year, they had lent, they were entitled to interest. And that is why you got interest as 60,000. I hope this is clear to you. I hope you have decoded financial activity. Now, please stay tuned. We will move further in the next session. We will learn about the operating activity, how to calculate the cash flow. Thank you for joining me today. Have a great day and stay tuned.